Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Welcome to this week's Top Stock Picks. I'm Kevin Cook, and I'll be joined later by Brian Bolin. My top pick is Nvidia. You can see on my screen here, I'm on the Nvidia newsroom. This is a place I tell investors who love Nvidia or don't know that much about Nvidia to go every week because there's so much news every week. And I profiled a bunch of great news after the company's recent GTC conference. You see GTC right here? This is the GPU Tech Conference that Nvidia does twice a year, usually like November and March. And that's where you get a ton of new innovations and news. So for our Zacks Confidential subscribers last week, I did a special deep dive into what Nvidia revealed at the GTC, which took place March 21st to 24th. And basically Jensen Huang and company did not disappoint. I'll show you this list I think I put in here. Oh, I didn't put the whole list in, but they issued 14 press releases in one day. And NVIDIA is not joking around. When they issue a press release, it's for a very specific innovation targeted towards a specific industry use application across, science, technology, engineering, university research, corporate data engineering. So, and in my special report here for Zacks Confidential, I highlighted 5 of those things. So here was one. NVIDIA AI delivers major advances in speech, recommender system, and hyperscale inference. If you don't know what inference is, that's where AI can learn. It's beyond deep learning. AI, you're not just feeding it data and training it. It does its own inference. The Grace CPU super chip, crowding out Intel in the data center for CPU chips, while they own the space for AI in massively parallel architectures and GPUs. NVIDIA in medical devices, computational sensing, imaging, continue to push the envelope there. Jetson is their robotics platform. So NVIDIA, the reason I recommend NVIDIA all the time is because it is almost the category of one software and hardware stack for AI. And what you get with Jetson is a developer kit so that any corporation can build their own robotics platform. That's huge. So, they've got the software and the hardware to do it. And then a little bit about the Omniverse. So I talked about all those things. Let's go to the chart real quick. But if you want a copy of that Zacks Confidential report, just email ultimate@zacks.com and tell them Cooker sent you. All right, here's the NVIDIA chart. I was telling investors January, February, and March, buy NVIDIA at 220. If you already have a position, be nibbling. If you don't have a position, buy right now at 220. And you got 3 chances to do that: January, February, March. Here we are, nice little pullback. I think this is a pullback to buy. Buy 260, and because I think we're going to make new highs probably in the next 6 to 9 months for NVIDIA. So that's the chart. All right, let's look at the estimates real quick. So Zacks number 2 rank right now, which is a buy. We've got a 700 billion market cap, but look at this sales growth right here. So we're going to do 34.5 billion this year, which is 28% growth, and then nearly 40 billion next year are the estimates, which is still a respectable nearly 15% growth, and that could all go higher. What's happening here is that the data center revenues are slowly overtaking gaming. So gaming was always 55-60% of the company. Lately, it's been split, and data center will just continue to overtake it because of this demand for hyperscale computing and AI applications. And the earnings growth is there too, 25% this year, 15% next year. So that's why I say NVIDIA is a buy. And you just accumulate it on those dips if you can. We're looking for at least 300 probably by this summer. All right, next up is Brian Bolin.
Thank you, Kevin Cook, for that lovely stock pick. This is Brian Bolin. I am the aggressive growth stock strategist here at Zacks. and I'm coming to you with my top stock pick for the week, and it's Twitter. TWTR is the ticker. It's a Zacks rank 3 with a D for value and an F for growth. But you can see this stock is on the move. Here, let me bring down the whoops. First time using this, apparently. First time using a computer. That's me, Brian Bolin. All right, so we can see right here, the stock is trading in the low 30s, but all of a sudden, boom, right up to 50 here. This is the Elon Musk buying a 9.2% stake in the company. That's bigger than Vanguard. That's bigger than everybody. So let's just take a look at what we would normally look at here. And I'm gonna bring it right back down in here. This is the detailed estimates page. And we can see a beat, a big beat, a gigantic miss, and a meet. Over the course of the years, Twitter has had very poor management, at least in my opinion. And we look at the estimates. Look at this one. This is going the wrong way. 5 cents. It was 12 cents down to 5 cents. This one popped up 15 cents to 7 cents, 77 to 84, and 105 to 116. This should be a Zacks rank number 2 based on what I'm seeing there. And then let's take a quick look at the growth. I think I was taking a look at that earlier. We see 18% top line growth this year, 22% next year. That's pretty good given the size of this company and what's going on there. So let's go ahead and take a look at the valuation section, my favorite. All right, 60 times forward earnings, and that's because of that recent big spike in price. We see 20% top line growth in the most recent quarter. 5.5 times book it's a little rich, but it's okay. 7.8 times sales is something. But here we see margins, operating margins, just going the wrong way. This is a big X here. And if we look at net margins, it's the same thing. Bad story there. Let's go ahead and look at the chart, and then we'll just talk about the next idea. All right, so here's the chart. And if we think about this stock over the last several years, this stock has stayed in this range, and I'm going to tighten this range up. And it's, between 50 and 20 in there. That's where this stock has lived. And given the potential for this, very short amount of time here was where it was above this, short amount of time below. But over the course of these years, if you think about how many other stocks performed so well over the last 4 years, think about that. That's 22, that's 21, that's a year, these are years. Even non-tech things have really outperformed over that time horizon, and given, even with the pandemic. So the idea here is Elon Musk is coming in, and there could be dramatic changes to Twitter, and getting rid of management there and getting fresh blood in there is probably key to the idea, to seeing it move. So if we think about Elon Musk moving in this time frame right around in here, maybe your next institutional buyer will have to accumulate, and it's already, to what, 50? I'm looking at it in live terms, 52. So, in a 60 range, they will probably have to end up accumulating another, 10 to 15%, and then a buyout target if you're going to go take private in the 70s. That would be the most realistic price area there. That gives the highs a chance to cash out. That still leaves a lot of opportunity on the table for Musk and company. Does he do that or not? I think obviously, as the largest shareholder, he's filed a 13G, and that's a passive stake. If he wants to turn it into an activist stake where he's going to do something, he will file to make it a 13D. So if that happens, then the game is on, and the stock will immediately spike again if he moves it to that. But I'm sure he's going to try to give his other business partners a chance to get in at probably a better price to make the deal more accretive for them. So that is my top stock pick for the week. It's Twitter. It's the Elon Musk buying. There's the continuation buying, obviously, in here again today, up another 5%. And I want to now point you to Zacks.com/promo for our latest promotions across all of Zacks.